Hi friends, I'm going to talk about prepaid expenses today. Uh, Before I explain about the prepaid expenses, let me explain about expenditure. What is an expenditure? Any amount paid by the business for the services received is known as an expenditure. Let me repeat again. Any amount paid by the business for the services received is an expenditure. Let me put it on the board. Any amount paid by the business for the services received is an expenditure. Let us take an example. Salaries paid to employees. Why do we pay salaries to employees? Because they are the people providing services to the business, hence business is making payment to them. So, business is receiving services and making payment. Hence, salary is an expenditure. You got my point? Let me get into prepaid expenditure now. What do you mean by prepaid expenditure? Any expenditure or any amount paid by the business for the services to be received is known as prepaid expenditure. Let me repeat again. Any amount paid by the business for the services to be received in the future is known as prepaid expenditure. Let me put it on the board. Amount paid by the business for the services to be received. So now you can see the difference. Expenditure says for the services received. Amount paid for the services received. Whereas prepaid expenses says amount paid for what? For the services to be received in the future. So, this is called prepaid expenditure. Let us take an example. Say currently I am in the month of November. Employees provided their services for the month of November. So I have to pay salary to my employees. At the time of making salary payment to my employees, by end of November, along with the November salary, I also paid December salary to my employees. In this case, what happened? I received services for the month of November and I am making payment to my employees for November. But at the time of making November month payment, I also paid December month amount. So, December services I am yet to receive. I did not receive. I am going to receive them in future. But I paid in advance. So, December month salary paid in advance in the month of November will be considered as prepaid. Hope you are clear with the example. Now, let me explain the journal entries. When we pay expenses, I'm not talking about prepaid now, I'm talking about only expenses. When I pay the current month expenses, what entry we write? When we pay prepaid expenses, what entry we book? I'm going to explain that. When we pay current month expenses, as per nominal account, all expenses and losses are to be debited. So, I debit expense account. Since cash is going out, as per real account, credit what goes out. So, since cash is going out, I need to credit my cash account or bank account. This is for the current month expenses. Let me write an entry for prepaid now. My business paid an amount for the future services. That is called prepaid, right? So, what entry I need to book? Prepaid expenditure is an asset. Since prepaid expenditure is an asset, you need to debit that. So, prepaid expense debit. Since cash is going out, as per real account, you need to credit what goes out. So you need to credit cash account or bank account. This is the entry for prepaid expenses. So you should be knowing what entry I am supposed to book if it is a current expenditure and what entry I am supposed to book if I pay prepaid expenses. This is the entry you need to book. Now, I will explain by taking one case study how to book your prepaid expenses. Let us say on November 1st, I paid 12,000 rupees rent. 12,000 rupees rent for 3 months. Starting from November to January. November, December, January. These 3 months I paid on 1st November. Now, I am in the month of November. What entry I am supposed to book in the month of November? What entry I am supposed to book in the month of December? And what entry I am supposed to book in the month of January, we are going to discuss now. Let us say in the month of November, how much I paid? 12,000 rupees. So, if you see here, this 12,000 has 3 components. One, November month, December month, and January month included in that. 3 months. November month 4,000, December month 4,000, January month 4,000. But total 12,000 paid on November 1st. So, On November 1st, what entry I am supposed to book? November 1st, when I am making an entry, since I am in the month of November, 4,000 rupees of November rent will go to expenses. That means P&L. The remaining 8,000, December and January together, will go to prepaid expenses. One will go to expenses and 2 months will go to prepaid asset account. So the entry will be in the month of November, expense account debit 4,000 as per nominal account, prepaid expenses debit 8,000 because it is an asset, cash or bank credit 12,000. This is the entry we need to book in the month of November. Then December, what is that we are supposed to do? Before we go to December, let me tell you, this 8,000 will be showing as a current asset in my balance sheet. This is current asset in my balance sheet. And this 4,000 would have gone to my P&L account of November. Correct? Now, once I get into the December, whatever amount I am showing as current asset in the month of November, that is 8,000, it includes 2 months expenditure. One is for December and other one is for January. So what I am supposed to do now is, to the extent of December expenditure, I need to reclass from prepaid expenses to my expenses account. This is called amortization. What do you mean by amortization? Amortization means allocation of cost over a period of time is called amortization. So what I am doing here, I am allocating this 4,000 rupees expenditure from prepaid expenditure, which was already booked in the month of November. I am allocating to December now because I am currently in the month of December. Hence I need to book this entry. So this was already debited in prepaid account. To reclass from prepaid to expenses, I need to debit expense account, debit 4,000, and I need to credit my prepaid expenses 4,000 in the month of December. You got my point? Now December entry is over. After posting this December entry, if you go to your balance sheet and see the prepaid expenses account, this will be showing only 4,000 rupees. You know why? 4,000 you already booked in November as an expenditure. As soon as you got into December, you already reclassed 4,000 rupees from prepaid expenses to expenses account. So these two are over. And the rest 4,000, which is available in prepaid account, prepaid expenses account in balance sheet, current asset side, will be reclassed once you get into January. So let us say now I got into January. Now I got into January month. So what is available in my current asset account? 4,000 rupees available. So this 4,000 I need to reclass from prepaid expenses to again expenses account, which is known as amortization. I am amortizing the 4,000 prepaid expenses from current asset to P&L account. So the entry will be expense account, debit 4,000, credit prepaid expenses 4,000. Once I post this entry, what is the balance available in my prepaid expenses account I need to see? See, in the month of November, I debited my prepaid expenses with 8,000. In the month of December, I credited my prepaid expenses with 4,000. So, now 4,000 debit is available. Once I got into January, I again credited, reclassed 4,000 prepaid expenses to expense account. So now what is available in prepaid? The prepaid account is 0 because the amortization is completed. Amortization period is completed. Hence, I can close my prepaid account of this particular transaction. Are you clear now? This is what the prepaid entries we need to book. I will tell you how it appears in balance sheet as well. Balance sheet and P&L account. I will show you that as well. Let us say I have P&L account. I have balance sheet. In the month of November, I debited expenses 4,000. So that will go to P&L account. It will come here, 4,000. And I debited prepaid expenses 8,000. So this is November month. I debited prepaid expenses 8,000. So it will come to current asset. Prepaid 8,000. And I credited my cash and bank 12,000. That will also appear here. Cash and bank. Let us say I have in total 15,000 cash, out of which I paid 12,000 for this prepaid. Then prepaid. Prepaid and current month expenses together 12,000. So the balance 3,000. This is how it will appear in our balance sheet. Next month, December month, how it will show? December month, this 4,000 will come to P&L account. Right? Because I debited expenses. And my current asset will show only 4,000 rupees because I am left with only January month prepaid part. So it will show only 4,000. And my cash balance will remain same because I already paid. Nothing, no changes will be there. Then, once I get into January month P&L account will be debited with 4,000. And my prepaid expenses will be 0. It is post. Because this is reclassed from prepaid to P&L account. This is how our prepaid expenses will be shown in our P&L financial statements. Are you clear now?